There is one stock that is about to explode, in my opinion. It is ticker symbol SOXL, SOXL. It represents semiconductor companies. And if you've seen Nvidia, Nvidia is at all-time highs. It's gone sideways for 3 months. And with that $100 billion investment in OpenAI, I believe Nvidia is going to break out. Now, you might think Nvidia is at all-time highs. Why would I buy it if it's at all-time highs? Fine. For that reason, here is another way to get exposure to Nvidia and other semiconductor stocks, which also look good, like AMD, for example, looks good right now. It doesn't always look good. It's through SOXL. Let's talk about it. Let's jump right in. Now, if you haven't hit that like button, hit that right now if you like stock ideas in a very timely manner.
This is Sam Putnam.
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 All right. Sorry for the attitude here, but I personally think Nvidia is a great buy right now. Yes, it's getting near all-time highs, but it also has gone sideways since the beginning of August. It's really only 2 months, but if we go back, it's almost been 3 months of basically sideways, which is a long time for a stock considering what the market did the last 3 months, which is just piled up. So, but I get it. I hear you if you're like, well, Nvidia earnings sort of sold off, just barely reclaimed them. I don't want to buy it. There could be overhead supply up here. Fine. For that reason, I could say, hey, check out AMD. Talk about a low risk entry, right? It's not at all-time highs. All-time highs are actually all the way back in last year, mid-summer last year. So you could say, all the way back in February of last year. All this to say, you could say, hey, I want to buy AMD. It's like, okay, fine. There's a low risk entry here, risk $1, whatever it is, in this sort of choppy flag. I personally think this flag is a little choppy to buy right now. So for that reason, I think it's easier to just get situated in SOXL. It's not actually a stock, okay? It's an ETF, but it trades a lot like a stock. And it sort of looks similar to CoreWeave in a way, which is also shaping up here. It is holding. It did sell off a little bit. CoreWeave is the AI data center way to play Nvidia. They have a bunch of debt. They're buying a bunch of GPUs. Their recent IPO, they're worth maybe $10-15 billion. So all these stocks have risk. This is an IPO. This is the biggest stock in the market at all-time highs. Maybe that's a risk in your eyes. For me, it's not. You want to buy things that are up because they got up there for a reason. But that only applies to the best companies in the world, which Nvidia is. But the reason to buy SOXL is maybe you want a little more safety. And for that reason, fine. Yeah, it is grinding up a little bit. It's in a flag type formation, higher lows sort of coming to a head here where it's going to make a move and it's probably going to be the upside. That's why we have it on watch. And we have a level going back at this $35 level, which goes all the way back here. And you can see there's a little more volume there. It's kind of equally spread actually, but a lot of these people would have already sold, so this isn't even that relevant. It would be more relevant to look at it in sort of 180-day fashion, where you can see we're pretty much, there's not a lot of backholders up here, so that's even more reason to say this is a good buy. It sort of doesn't have a lot of resistance. There'll be blue skies above. Now, for people who are like, I don't want to look at charts. You just looked at charts for like 3-4 minutes. What are you doing? I get you. Okay, this is what SOXL does. Okay, they do hold Nvidia, but they also hold a lot of other semi stocks. They hold Broadcom. It's actually a bigger holding than Nvidia. AMD's right up there. Qualcomm, Intel. Recently had that huge jump on the Nvidia investment following the government stake. Texas Instruments, that is like the calculator company, right? But they do more than that. Micron, MRVL, Marvel, Microchip, and LRCX. So, a good way to figure out if the ETF is going to break out is to say, well, we talked about AMD and how that could go up, or at least it's a low risk entry. We talked about Nvidia. Broadcom itself, which again is the biggest holding, doesn't look great right now, okay? But it's only less than 10%, okay? As far as these other companies, Micron is holding up here, sort of a little undercut, but held this level here. LRCX, same thing, looks very similar, up a lot, but held that sort of level. And Marvel as well was on that list. Pretty similar, probably a little extended. So it's very hard to find an ETF that has all of its holdings look like they're about to break out, but sort of an aggregate, it does create a sort of flag that is representative of a bullish flag, a breakout flag, similar to this one, okay? I keep coming back to this one because I really do think Nvidia is at a really solid spot to buy right now. But I do understand some people look for an ETF. And what this ETF does, it's a 3x bullish ETF on those semi stocks. And the way it achieves that 3x is it daily rebalances to try to represent 3x performance on the average percent of those. So if that sounds like I don't know what it actually does, you'd be right, okay? What it does mean, though, is that if it is rebalanced daily, you can have some whipsaws, okay? And there actually wasn't that many whipsaws in the tariff moves. I mean, it just basically followed the market, which was crazy. But just to give an example of, so a more modest move in the actual market, seems sort of modest compared to the tariff move, was actually pretty severe in SOXL. So all this to say, you know, if you do see this thing gap down and have a bad day, just get out of it, okay? I don't know if that needs to be said, but it never hurts to say it. So just because it is a 3x bullish ETF, which means that when the semiconductor stocks go up, this stock goes up as well. If the semi stocks go down, AVGO being the one that could go down more right away, in aggregate, this one could go down 3x as well. So maybe that goes without saying, but it never hurts to reiterate. As far as this is inside baseball stuff. So there was $2 billion pulled from it, which is kind of a lot for an ETF that was only 20 billion or 10 billion. So it's 10%, 20% of its market cap taken right out. Compared to during that same period, less than a little more than $500 million of TQQQ was taken out, and TQQQ is 30 billion. So that's 3% of TQQQ was taken out. Meanwhile, 20% of that SOXL semi ETF was taken out. So people are a little squirrely in terms of keeping their money in this thing, but we already looked at what it can do. This is the challenge, the risk of buying it. TQQQ, just basically follows, well, it's triple the QQQ, which looks exactly like this. So why are we buying specifically semis instead of QQQ? Well, because QQQ basically follows the market, because the market is basically the Mag 7 and MAGS, the biggest FANG companies, the Meta, Apple, Nvidia. What are the other FANG companies? Amazon, Netflix. Trying to sound out all the letters. FAANG. Well, F is no longer. Now it's Mang with the M. Google, right? That's the G. You get the idea. You don't really want to own all these companies. I don't want to own Google up here, so I don't want to own Mags. I don't even necessarily want to own the market up here, but I do want to own Nvidia. And for people who don't want to own Nvidia, which, fine, SOXL is the idea. Okay? So we could go into detail about it, but we're pretty much just rehashing a dead horse here. And this $100 billion OpenAI investment, Broadcom, whatever, VMware, that sounds like virusware, whatever the word for that is, spyware, vaporware. Sorry, Broadcom. AMD, yeah, dropped a little on the Nvidia Intel investment. Intel went up a bunch. Qualcomm, you know, great. New PC chip. I should hope so. This is what Qualcomm looks like. Intel's actually in this ETF as well. So it does encompass Intel's gains. Qualcomm looks all right. You know, if it holds here, then it'll look all right. This was a flag, you know, did break out. Just yet another example of why we sell at 10% up. Because look, you sold half at 10% up. You still have half. Fine, you sell out here. Your average sell is all the way up here. You made like 7-8%. Pretty awesome. Risk 1%. Maybe you risk to right here. No, even if you risk 2%. I personally am more of the idea that you should risk 1% and just have a lower win rate, but some people want to have more winning trades because it just sounds good, even though it's not mathematically optimal. Whatever you do, you. Texas Instruments, that's TXN, Mu, yeah, tariffs, dividend, infrastructure, MRVO, dividend news, and that's pretty much all we have to worry about. We talked about this volatility decay where this thing can get a little bit whipsawy, and yeah, this fee is paid by the actual price of the stock, so you don't have to pay it when you buy and sell it. It's just visible in the actual movement. So if this starts to go sideways for a long period of time, meanwhile all these companies go up, Texas Instruments is kind of bottoming, although I don't like to buy bottoms. Marvel looks like this, MU looks like this, and maybe the fee is pretty high, but I don't think that we have to worry about the fee. It's like less than 1%. Doesn't matter. So, to beat a dead horse, Nvidia looks great, but fine. If you want another idea, here's SOXL. There you go. If you like these ideas, you want to chat about these in a more real-time fashion, which I certainly understand. You know, you might see this video at a later time than I record it. Head over to stockscommunity.com, try it out for $25 for 7 days. Give it a shot. You know, what's $25 these days? One lobster dinner, less than that, a lobster tail and a beer. And if you haven't hit that subscribe button, hit that button. Gets you notified of new videos as soon as they come out. I'll see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.